This is an iFVG, and I got my first payout in just 8 months after starting trading using this entry model. In this video, I'm gonna explain the model and go through how I would find a trade using the model, from finding the daily bias to executing the trade. The model that I used to pass my first evaluation account and get a payout is Dodge's iFVG model. I'm only going to give a brief explanation of the model because Dodge already has a video on it. So this video will mostly be focused on how I would approach the charts using the model. I'll be cherry picking an example for this video just for the sake of demonstration. But if you want to see my live analysis and trades, check out my Discord where I post pre-market analysis and my trades every day from the link in the description below. Now let's start on the higher time frame. I have an indicator to see the Asia, London, and New York sessions, and we can see that there is session AMD that formed. Typically, this means that we have Asia accumulation, London manipulation, then New York distribution, but in this case we have a range that was formed during both Asia and London, then a manipulation above that range, so we would be expecting price to go lower during the day. If we zoom out further, we can also see that we are respecting the 15-minute fair value gap. With the iFVG model, we want to see a liquidity sweep, delivery from a fair value gap, good draw on liquidity, and an inverse of a singular and obvious fair value gap with momentum. With that in mind, if we zoom into the 1-minute chart, do you see any good entries? No, because the fair value gaps aren't singular. In that case, what we can do is go on a higher time frame until the gaps merge into one. In this case, if we go on the 5-minute chart, we can see that we are delivering from the 15-minute fair value gap, sweat the relative equal highs, have LR, Asia, and London lows as a draw on liquidity, and a singular and obvious fair value gap that was closed below with momentum. The entry would be a market order as soon as the candle closes, and the stop loss would be a candle close back above the iFVG, with the TP at one of the identified liquidity pools. With this model, you want to be taking partials and moving stops to break even quite aggressively, since it focuses more on win rate rather than RR, so this trade would have been a scale half and a break even trade. But that is something that you can experiment with and personalize to your liking. Just as an additional note, with the way Dodge trades, this entry would have been invalid because we swept the first internal low before the candle closed, but that is something that you can adjust to your liking as well. After getting stopped at break even, if we zoom into the 3-minute chart, we have a textbook setup that worked out perfectly. Here, we have a liquidity sweep at the highs combined with an SMT, delivery from a fair value gap, a strong close below the bullish fair value gap, and Asia lows, new week opening gaps, or low of week as a drawn liquidity. All of these in addition to the trade being in the bias of the higher time frame makes it an A+ setup, and even if you move stop to break even at the first low, you wouldn't have gotten stopped out. This is why Dodge likes to move stops to break even aggressively, because if you are truly right about your bias, then the probability of price moving back to the entry is low. And this is how you identify and combine your high time frame bias with the iFVG model. This is definitely one of the easiest models to learn, and by sticking only to trades that go along with your high time frame bias and the model, you'll have a good chance of passing accounts and getting payouts. If you want to know more about the model or have questions, check out Dodge's channel or ask me through Discord or in the comments. I hope this video was valuable, and have a great rest of your days.